After Craig had been working with me for about 18 months, I decided to start my own company. I was 57 years old. I looked around the bank. There are not a lot of people over the age of 65, and I felt like I wanted to work longer than 65. A lot of my clients said, we don't want to go to the bank. We want to wait till someday you're going to start your own business. And I said, probably not. But it turned out they were right. So I started my business August 1st of 1998. And business just flowed in. My goal was to be $100 million within a year and a half. I talked to Fidelity, Schwab, and a number of other brokerage firms, and all of them said, don't count on more than 20 or 25 million. Talked to a couple of registered investment advisory firms in Kansas City, and they told me the same thing. It's very hard to bring money in. People say they're going to bring it to you, but they don't because they're happy where they are. I felt differently. I felt like I had some relationship with these people. Interestingly enough, within a year, we went from zero to $97.5 million of assets in our control. And within 2 weeks after that, we were at $105 million. Several years later, Craig called me and said, I'm getting tired of working down here at the bank. I'm the youngest person down here. There's been a lot of turnover, and now I'm the second senior person in the department. So he said, I'm not sure I want to spend the rest of my career down there. So he came out, met with me. I introduced him to our partners, the three other partners we had in the firm. And I said, interview him, but don't interview him just as a potential partner in the firm, but as potentially the managing partner taking over when I retire. And I already talked to my three partners. None of them were really had the money to take over or the capability of taking over as an entrepreneur. Craig grew up in an entrepreneurial family. His grandfather, his father, his great-grandfather had all been entrepreneurs. So at dinner tables, the discussion was always on entrepreneurship, problems you have with small businesses, problems you have with customers, hiring people, and things like that. So he came by it naturally. And I felt like he would make a good partner. So he came out, they interviewed him. They spent a whole day interviewing him, really, between the three partners. We hired him. It was interesting. Up until that time, I had no website. I didn't need it. And I had no brochures. I didn't need it. Everybody knew me. And people were just flowing in. And my two partners at that time and three partners were bringing business in on their own. And it worked out well. So we didn't need anything. But when Craig came on, you've got to have brochures. We've got to have a website. So he worked on getting a website developed. Everything is an evolution. And since then, we've modernized our website, and we're working on a new brochure. So it's interesting how things evolve. Now we're in almost 40 states and 3 countries, bigger than I expected to be. I don't know many of the clients anymore because Craig travels to see them. I travel still to see some of our clients, but they're the ones I've dealt with. The thing I'm proudest about with Paragon and our relationship with our clients is that we're now dealing with 4 fourth-generation family members. And been being entrusted by young people who are in their 20s and 30s to come to me and said, would you manage my money? It was a thrill because I had met their grandparents, managed their money. The grandparents brought their parents in, so it was the great-grandparents that came in. They brought their children in, and then now the grandchildren, the great-grandchildren are coming in to the firm.
When I graduated college and started at the bank in the trading department, it was a great time to start in the industry because I got to see a lot of things evolve through my first couple years. We were trading in eighths, which is 12.5 cents a share spread between what you could buy it for and what you could sell it for. And we watched that go to decimalization, meaning it went down to a penny on the trading price. We also saw that bid-ask spread from when you did buy a over-the-counter stock go from $4 a share to get squeezed all the way down to a penny. So we saw a lot of major events in market history happen during that 18 months I was on the trading desk. I learned about products and I learned about investments that I'd never heard of before, like short-term commercial trading, securities lending, municipal bonds, taxable bonds, corporates, high yields, and of course different types of stocks, managing soft dollar budgets, a lot of different things that were involved on the backside of the investment business. A lot of people coming out of college start off in a sales role, like Howard did, cold calling off of a list and learn how to sell stocks. I was fortunate that I got to learn how the market works behind the scenes, how stocks move from a trading standpoint. When I came out to work with Howard, I got a chance to work with clients. I got a chance to learn, sit in all of his meetings, see how he ran meetings, how he worked with the clients. And then I got to take over one of the largest books of business in the bank when he left to start Paragon. And really I got thrown into the fire working with clients that were much bigger than what somebody my age should have been working with. And I really learned a lot of very valuable lessons during that time period. I was very fortunate that we had a regime change and they brought in new management. I aligned much better with the new management than I did with the old management. And at age 27, I was asked to start a mutual fund from scratch. Bank decided that they wanted to have a technology fund. I got to put together the potential buy list, got to hire my team, my co-manager, work with the regulators to get that up and running. And then we did it again a few years later with a growth fund. So I really was integral in starting two mutual funds and co-managing both of those during my time at the bank. When I decided to leave, at that point, I was managing $80 million pension plans, I was managing mutual funds, and I was managing an entire book of individual clients. I was on the equity selection committees. So I had a lot of different things going on and decided that I really wanted to just work with clients. I wanted to focus on, like Howard did, having a smaller group of clients and giving them an excellent experience and an excellent client service that they weren't going to get at a big institution. And so I was able to join Paragon in 2006. And I was able to bring over a significant number of my clients with me and then continue to grow that during my time at Paragon.
When I first became a broker down at E.F. Hutton, I saw my contemporaries, my compatriots down there doing a lot of trading. They'd call you up, hey, you got a 2-point gain in that stock. We bought 100 shares of it last week and it's already up. You got $200 gain. We got to take that profit and move into something else. I thought, this is crazy. These people are in the 50, 60% tax bracket, and they're going to pay a short-term capital gains tax on it, which means they're going to pay at their level, and they're going to have $100 left over gain at the most, and then they're going to put into something else. They got a good stock. My belief is if you buy a good stock, hold it. And a lot of my clients told me how they held stocks through the Depression. They bought in the Depression, and they're still owning it 20 and 30 years later. So I wanted to model my business on long-term investment. We've had a number of stocks that are up over 100 times in value. That's not 100%. That's 100 times. So every $1,000 I invested is now worth $100,000. I had a client call who had been a client of mine at E.F. Hutton, and then she was at the bank when I was with my father-in-law. And so she wanted me to take care of her money when I was at the bank. She called me. She's close to 90 years old. She called me. She says, I need you to sell some of my stock. And I said, you got a lot of money in cash. How much do you need? She said, I don't need any cash. Well, what do you want to sell it for? Howard, I go to all these parties with people, and they're all talking about how their broker doubled their money in the last year. They made this profit, made a 20% profit, sold, and you never saw my stocks. So I said, I'll tell you 2 stories that'll help you shut down the room. Number 1, we've got 4 stocks in your account that I bought for you back in the 1960s. Now this is the 1990s. And they are up over 100 times in value. My dividends on that stock are about 250% per year of what I originally invested. I'm getting $25,000, $30,000 a year in income off of it. Number 2, my investment advisor doesn't believe in helping my rich uncle. And she says, wait a minute, I'm 90 years old. Do you really think I got a rich uncle? I said, he's everybody's uncle. It's Uncle Sam. And she laughed. She said, oh yeah, I guess I do take care of him, don't I? I said, all of us do. So I said, when was the last time you paid a capital gains tax? She said, what's that? And I said, when you sell stock, you have to pay it. All the stocks we bought for you, they're great stocks. The Coca-Colas, the Exxons, the General Electric, and companies like that, we bought basically pennies in the dollar. And if we sold any of those, you'd be paying out a very large capital gains tax for federal and state. And we have to reinvest that money and it has to go up 20 or 30 or 40% just to get you back to even. We go through the whole story again. She writes it down. And so she repeated the story to him. And I said, what happened? She said, there was dead silence in the room. And somebody says, hey, how about them Royals? But she says, you're going to call us from 3 of the people there at the dinner party because they wanted to have your number. Sure enough, within a day or 2, all 3 of the people called me up and said, can you do that for us? And I said, of course. When you do a good job for people and you underpromise and outperform, they appreciate you.
Paragon was really built on the principle of relationships, of having smaller number of families and really out servicing our competition. It's become a cliche in the industry. Everybody thinks they give great service. How do you quantify that? And so we always try to have a low number of clients compared to the number of people we've had to give that customer service to them. But over time, what we've seen is the industry changing. And we've seen the markets having bigger and more volatile drops. We saw a 50% drop in the stock market in 2000 with the technology crash. Then we saw it rebound 3 years later. We saw it hit a new high in 2008, only to crash another 53% with the financial crisis. And so the market goes up 2/3 of the time. It goes down 1/3 of the time. Bull markets tend to be about 48 months in length. Bear markets tend to be about 16 months in length. And so we started evaluating things and saying, our clients are getting a little bit older. Clients are getting a little bit more frustrated with these huge swings in their portfolios. How can we change to better service our clients, not just from a customer service perspective, but from an investment perspective? Going all the way back to Howard at E.F. Hutton, we'd always been individual stocks and individual bonds, and we hadn't really ever explored a lot of other asset classes. And so we really did a deep dive into the market of looking at things like options and different things that were out there that we could use to protect our clients from that next big downturn. And so around 2014, 2015, we started discovering other things that we could do, such as structured products, such as alternative investments like private credit, private real estate, private equity, that there were other things that we could integrate into the business and really educate our clients of what real wealth on the coast do with their clients, what the big firms, the big wirehouses, the big investment firms do for their top private banking clients. And we've really seen a very warm reception to that, where not a lot of smaller registered investment advisors were doing this type of investing. The industry has really shifted more towards financial planning. When Paragon was started and up through their first 10 to 15 years, most registered investment advisors were small. They were 25 million, 100 million, 500 million under management. If you got to $1 billion, you were a really big registered investment advisory firm. But in the last 10 years, we've seen a lot of mergers and acquisitions, a lot of consolidation in the industry. And now you're seeing firms with $50 billion, $100 billion, $200 billion under management with tens of thousands of clients. And it's all about scale and it's all about profitability. And we've really wanted to stay small. We've really wanted to keep that essence of what Howard's vision was when he started Paragon, where we know all of our clients by name, that our entire staff knows all of our clients by name, that when they call in, they don't have to tell us their account number or who they are or who they work with, that we know who they are, that we're still getting referrals from their friends because we're doing investments that other people aren't doing, and our style is different than what other people are doing. When you're extremely large, your options are limited because of scalability. So a lot of those firms are using exchange traded funds or mutual funds and asset allocation models using traditional asset classes. And we're really trying to educate our clients and the prospects that are referred to us that there's a different way you can do this with and protect the downside and protect yourself from that next big drop in the market while still getting upside returns, generating income if you need income to live on, generating growth if you need growth to live on, and being able to do it in a different way.